Hi, today's solution Cambridge IGCSE Accounting Paper 1 May-June 2022. Question number 1. Which task would be carried out by a bookkeeper? Given options are comparison of financial statement between years. Here the question is the task of a bookkeeper. Bookkeeper means entering all the financial transaction or recording the financial transaction. So the first option is not correct. Preparation of financial statement, provision for information for decision making. So the correct answer is question number option D is the correct answer. Question number 2. What is the accounting equation? Accounting equation is equal to assets is equal to liabilities plus capital. So the first option, assets is equal to capital minus liabilities. No. Assets is equal to liabilities minus capital. No. Assets minus liabilities is equal to capital. Assets is equal to liabilities plus capital. So capital is equal to assets minus liabilities. C is the correct answer. Question number 3. Sarah sold goods on credit to Zafar. How was this recorded in Sarah's ledgers? Sarah is the supplier. Zafar is the customer. Here they are given two options, general ledger, sales ledger. When selling goods on credit to Zafar, sales is always credit. What is the journal entry? Sales account is credit. Zafar account is debit. So here general ledger, credit sales account. The sales account is credit. Credit sales account. Sales account is credited. Then sales ledger, debit Zafar account. Debit is Zafar account. Credit is sales account. So option A is the correct answer. Question number 4. Omar sent a credit note to Miriam for goods returned. Omar is sending credit note. It means the supplier will issue the credit note to the customer when the customer send a debit note. Once the debit note accepted, supplier send the credit note. So what is the question? How would Miriam record this transaction? Here Miriam is the customer. Omar sent credit note means this is the sales return to Omar, while purchase return to Miriam. Purchase return. Purchase is always debited. Purchase return is always credited. So the purchase return to whom? Omar. So Omar account debit. Purchase return account credit. Correct answer is option C. Omar account will be debited. Purchase return is credit. Five. The discount column on the debit side. The discount column on the debit side of trade days cash book is 1300. The discount column on the credit side total 700. What is the question? The question is, how much discount did the trader receive? In the cash book, there are two discount we shows. Debit side, all the receipts we enter. Credit side, all the payments. So, when we receive the money, business gives the discount. That is discount allowed. While when the business do the payment, that time business receive the discount. So, the discount received will be on the credit side. So, here the credit side, how much is the discount received? 700. So, the correct answer is B. Question number 6. Kai bought office equipment. He purchased office equipment from Meena and paid immediately by bank transfer. How should Kai record this in his accounting records? He purchased a office equipment and paid by check. Bank transfer means did the payment by bank. So asset account increase will be debited. Office equipment account debtor. Then the payment will be credited. Here the payment done by bank. So bank account is credit. So the correct answer, here the options given, bank is debit, no. Bank debit, no. Meena account debit, no. Office equipment debit, bank is credit. Option D is the correct answer. 7. Jabari maintains a petty cash book using the imprest system. The imprest is restored at the end of each month. End of each month the imprest. What is imprest system? The petty cashier start the petty cash book with a fixed amount. So at the end of the year, business, they will restore the amount, how much they spend in that month. It means how much vouchers they received. So the options we can see, which amount restore imprest at the end of the month. The first option, the amount left in petty cash less total vouchers received. No, that is the balance carried out. It is not the restored amount. The amount left in petty cash plus total voucher. No, that is the full amount of imprest. Imprest amount less the total vouchers received. No. So the correct answer, the total vouchers received. How much vouchers received, that money deducted from the imprest amount. So at the end of the year, that amount will be restored. Question number 8. Which statement about trial balance is correct? First one, it assists locating arithmetical errors in the bookkeeping records. The first one is correct. Let's see the remaining. It is a proof that entries in the ledger account are free from error. It reveals all bookkeeping errors. It shows ledger account errors only. The perfect answer is option A. Question number 9. What is an example of a compensating error? What do you mean by compensating error? Compensating error means one error will be cancelled by another error. Here the options are, a payment for office equipment repairs was debited to the office equipment account. This is not compensating error. This is one error. They are entered to the office equipment account. A purchase of goods from C. Jones was credited to account of C. Jones. This is not compensating error. The sale of goods 65 to Aziz was entered in the books 56. This is transposition. The wages account was undercast, $100 undercast, and the rent account was overcast, 100. This is the compensating error. It means wages account $100 is less. The same time rent account by mistake $100 overcast. So which they are not entered in the wages account is compensated by this error 100. The correct answer is option D. Question number 10. After the preparation of Abdul's financial statements, two errors were discovered. The first one, the purchase of a machine by bank transfer 5,000 was omitted from the accounts. And second error, the purchase of a motor vehicle 15,000 was entered in the motor vehicle repair account. The first one completely omitted from the book. They are not entered in the book. The second one, motor vehicle entered in motor vehicle repair account. Asset account entered to the expense account. So what is the question? The question, what effect will correcting these errors have on the non-current assets and working capital? In the non-current asset, purchase of machine by bank transfer, that is 5,000 is there, 5,000, and purchase of motor vehicle 15,000. So after the correction of error, they omitted the purchase of machine. So when they corrected this plus 5,000, they have to add in non-current asset, and purchase of motor vehicle by mistake they entered in the motor vehicle repair account. Now when they are correcting the error, they will add motor vehicle 15,000. So total they add 20,000. So it will increase the non-current asset 20,000. Next, working capital. Working capital means current assets minus current liability. So the purchase of machine by bank transfer 5,000 was omitted. When purchasing the machine by bank transfer, the current asset bank will decrease. So when we are correcting this, it will decrease 5,000. The second error, it will not affect the working capital. So working capital minus 5,000. So increase 20,000 and decrease 5,000. Non-current asset, the first option increase, but increase 15,000 no, increase 15,000 no, no effect no. Option C is the perfect answer. Question number 11. Raj had a debit balance of 10,800 in the bank column of his cash book. He discovered that purchases 890 paid by check had been recorded 980. This is an error. The following appeared in the bank statement. They are given the bank statement but had not been entered in cash book. Bank charges, interest received, they are not entered in the cash book, and one error also there. What is the question? The question asks, what was the debit balance in the bank column of Raj's cash book after adjusting for these items? So here, what is the balance? The balance was, wrong balance is 10,800. Now he discovered that the purchase 890 paid by check had been recorded as 980. So actually they paid 890, but in the record they put 980. So what is the difference? 980 minus 890 is equal to 90 extra they deducted here. So we have to add it back. We added back this 90 and bank charges 76. 76 bank charges is an expense. It is not entered in the cash book. So we deduct it now. 76. Then interest received. Interest received is an income. This goes to the debit side. So 120 we will add. So the correct answer is 10,934. Answer D is the correct. Question number 12. Why is a sales ledger control account usually prepared by a different member of staff than the person who maintains sales ledger? Always the business will hire a different member to do the sales ledger control account. Why? To detect the fraud only. So which is the correct answer? One of the easy question. Correct answer is option A. 13. Tamil provided the following information for March, his first month of trading. They are given credit purchase return, total payment to credit supplier. During the month, Tamil overpaid a supplier 94 overpaid also. He did not make any further purchases from this supplier in March. Any further purchase he didn't do. So this 94 is more he paid to the supplier. What were the balance on Tamil's purchase ledger control account on 1st April? Here they are given two options, debit balance, credit balance. Here the debit balance we know that is 94 is the debit balance. In the purchase control account, the overpaid, he has to get the amount back 94. So option C and option D is 94. But what is the credit balance? Here the credit balance is 9,100 minus 3,322 minus 5,358, and we have to add back how much he overpaid. The overpaid amount is 94. So we should add it back. 94. So 9100 minus 322 minus 5358 plus 94 is equal to 3514. So the correct option D is the correct answer. Next, 14. The following payments were made by John when he purchased a machine. They are given the informations: purchase of machine, delivery charge, insurance, installation, prepaid. What is the question? How much should have been debited to the machinery account? That is the capital expenditure. How much? Here capital expenditure, purchase of machine is the part of capital expenditure. Delivery charge is the part of capital expenditure. But insurance is not the part of capital expenditure. Installation charge is the part of capital expenditure. Prepaid is not. So you have to add 10,000 plus 1,200 plus 900 plus 900. So the correct answer is $12,100. C is the correct answer. Next, question number 15. On 1st January, Zach entered the cost of repairing equipment 420 in the equipment account. This is the error. What will happen? Equipment will overstate 420. Now, on 31st December, depreciation of 20% depreciation per annum using straight line method was charged of the balance of equipment. What is the question? What was the overall effect on the book value of equipment on 31st December? Book value is equal to cost minus depreciation. Here the cost is added by mistake. The cost is added. How much the cost is added? Here the cost is added 420 extra. So plus 420, that is overstated. While depreciation, if the asset account 420 overstated, when the business calculate the depreciation, that also overstated in the depreciation, also overstated 20%. So 420 multiply 20%. What is the depreciation? The depreciation of 84 of this overstated as equipment account, that is deducted 84. Here cost overstated and depreciation also overstated. So the net effect 420 minus 84 is equal to 336 overstate. Actually it was overstated 420, but they deducted the depreciation also, the same mistake. So the net effect 336 overstated. Correct answer is option B. Question number 16. Atif depreciates his motor vehicle at a rate of 20% using reducing balance method. On 1st May 2021, Atif motor vehicle 35,000, depreciation 12,600. What was the balance on Atif's provision for depreciation account on 1st May 2022? Here, the depreciation is calculated at reducing balance method, means on net book value. The opening motor vehicle cost is 35,000. Depreciation balance is 12,600 on 1st May 2021. This is the opening balance. So we have to calculate the closing balance on May 2021 is opening, means April 31st will be the closing. So next year what will be the opening balance? That is the question. So let's calculate the depreciation of this year. This year depreciation on reducing balance method means net book value. How to calculate the net book value? 35,000 minus accumulated depreciation 12,600 is equal to 22,400 is the net book value. So the depreciation of this year 22,400 multiply. What is the percentage of depreciation? 20%. 20 divided by 100. 4,480 is the depreciation. So what is the question? What is the provision for depreciation account on 1st May? Total depreciation. We have the depreciation of this year 4,480 and opening depreciation 12,600. So what is the total depreciation? 12,600 12,600 plus 4,480 is equal to 17,080 is the depreciation. So the correct answer is option A is the correct answer. Next, question number 17. The financial year of Jung ends on 31st March and on 1st April 2021 he purchased machine for the cost is 4,000. He estimated that it would have useful working life of 3 years. Residual value $100. He uses straight line method of depreciation. The machine was sold on 1st April 2022. The selling price was 1,500. The question is, what was the loss on disposal? That is the question. So first we have to calculate the depreciation on straight line method. Cost minus residual value divided by useful years. That is, what is the cost? Cost is 4,000 So 4000 minus 100 divided by 3 is equal to 1300 is the depreciation. So now the net book value is 4000. Net book value is 4000 minus depreciation 1300 is equal to 2700. 2700 is the net book value, but they sold for 1500. So the loss is 2700 minus 1500 is equal to 1200 is the loss. Option B is the correct answer. Question number 18. On 1st April 2021, commission receivables 210. It was outstanding. Outstanding commission, opening outstanding is 210. Commission received during the year commission received 4850. Which journal entry should have been made at the end of financial year? What is the correct journal entry? So first we have to calculate the commission of 31st March 2022. Commission received is 4850 minus opening commission 210. 4640 is the commission received. Commission receivable is an asset and commission received is an income. So this income, all the incomes are credited in the income statement. So commission receivable account debit and income statement is credit. So the first two is correct, but the amount is, the second one is wrong. This is the amount correct. So the correct answer is option A. Next, 19. Which statement about debts recovered account is correct? First one, the account is used when an amount previously written off is received from a customer. Recovered account is if the customer pay the amount after written off the bad debt. So the correct answer is option A. Question number 20. Nula's financial year ends on 31st December. She maintains a provision for doubtful debts 5%. On 1st January, provision amount 800 is this is the opening. On December 31st, trade receivables owed 13,400, of which 600 was regarded irrecoverable or bad debt. What is the question? The question is, how much was provision for doubtful debts on 1st January 2022? So provision for doubtful debts calculation. After deducted the bad debt, we always calculate provision. So trade receivable is 13,400 minus the bad debt amount 600 multiply 5 by 100 is equal to 12,800 5 by 640. Correct answer is option B. 21. When preparing his financial statements, a trader valued his inventory at cost. He then found 10 units of inventory, cost is 12 per unit, were damaged. If he spent 2 per unit on repair, he could sell them for 9 each. What was the effect on the income statement of the incorrect inventory valuation? When the inventory is not correctly entered, what will be the effect? That is the question. So, always we should calculate the inventory at lower of cost or net realizable value. Here, the cost is calculated 10 multiply 12 120, while net realizable value 9 minus net realizable value is equal to 9 minus 2, that is 7. 7 multiply 10, 70. Actually, the lower cost is 70. 7 is the lower cost than 12. So, it should be 70, but by mistake, inventory is valued at, it is overstated. 120 is the amount they are given. So, what is the difference? 120 minus 70. 50 is overstated. Here 50 is overstated. So, it will overstate gross profit and overstate net profit. So, the correct answer is option B. Question number 22. At the end of financial year, Marik was owed $200 for interest on loan, which he had made to an employee. He gave a loan to an employee and he owes 200 from that employee. He recorded this in his financial statements. How did the interest on loan affect Marik's profit for the year, and where was it recorded in statement of financial position? Interest is the income. Interest is an income, so it will be entered in the income statement. Interest is the income, so it will be entered in the income statement. Income will increase. Income increase means profit increase. Then when he receive money, current asset, it will goes to the current assets. So the correct answer is profit increased, but current asset in the statement of financial position, current asset. The correct answer is option C. 23. What is the purpose of preparing partnership appropriation account? Partnership appropriation account is preparing to calculate the divisible profit. Here they are given the options to calculate interest charge. Interest is charging in the profit and loss appropriation account, but the purpose is not calculating interest. Then here again interest on capital also they are charging, but the purpose is not charging. They are calculating this to find the divisible profit and salary. So the correct answer is D is the correct answer. 24. Raj and Seema are in partnership sharing profits and losses 2:1. Raj withdrew 5,000 during the year and was charged 3%. It is withdrew means drawing. He charged 3% interest on drawing. Seema did not make any withdrawals during the year. Only Raj, he has done withdrawal, that is his drawing. He has to give 3% interest on drawing to the company. The profit for the year was 30,000. How much was credited to Raj's current account at the end of the year? So Raj, he will get the profit share. It will be credited to the current account. So first we have to calculate the divisible profit. Divisible profit is 30,000 plus interest on drawing. So how much is the interest on drawing? Interest on drawing is 5,000 multiply 3 by 100. That is 150. So 30,000 plus 150 is the total profit. 30,150. So Raj's share will be 2:1. So 30,150 multiply Raj's 2 by 3, 20,100 is the correct option. His profit share is 20,100. It will be credited to the current account. So option D is the perfect answer. Now question number 25. A limited company raised funds from an issue of debenture. Which statement is correct? The debenture are part of equity of the company? No. Equity means capital. It is not the part of capital. The debenture holders cannot vote at the annual general meeting. Option B is the correct answer. If you have any doubt in this question, please put in the comment box. I will clear you. And if you are not subscribed my channel yet, please subscribe my channel and continue watching. Question number 26. A limited company provided the following information: total equity on 1st January and total equity on 31st December. They are given opening and closing equity 500,000, 558,000. Then they are given ordinary share dividend paid transferred to general reserve. What is the question? The question is, what was the profit for the year? Here, opening and closing equity balance is given. So the difference is they are added with the equity. So 558,000, 58,000 minus 500,000 is equal to 58,000 added with the equity at the end of the year. So, the part of equity is general reserve and retained earning. So, this 58,000 included general reserve and retained earning. Retained earning means after paid interest, dividend and all. So, here 58,000 included this 12,000 also. So, we no need to add back this 12,000. But this 58,000 is after deducted dividend. So, we have to add back the dividend amount to get the total profit. So, 58,000 plus 25,000 is equal to 83,000. So, answer is option C. 27. Which groups includes the prime cost of a manufacturer? Here direct expense, depreciation, it's not prime cost means all the direct expenses. So direct expense there, depreciation is the overhead, royalty. So this is not the correct answer. Second, direct wages. Factory supervisor is not a direct expense. Factory insurance is not direct expense. Then third, factory overhead, not direct expense. Raw material, direct expense. The option D is raw material, royalties, direct labor. So all the direct expenses are called prime cost. So option D is the correct answer. 28. The work in progress of ZT manufactures on 1st January was 6,200 and the year ended it was 5,400. What was the effect on the cost of production for the year? Opening work in progress we add with in the manufacturing account. Closing work in progress is deduct in manufacturing account. So opening is 6,200 minus closing 5,400 is equal to 800 is more. So it will increase the cost of production. Correct answer is option C. Question number 29. A trader does not keep full accounting records but was able to provide the following information. Capital on 1st January, capital on 31st December given. Then they are given drawings. During the year, 9,500 was withdrawn from owner's private bank. So this is owner invested extra amount, additional capital. Purchase a motor vehicle to be used by the business. It means owner paid from his private bank. It means additional capital. What is the question? What was the profit for the year? So what is the equation to calculate the profit? Profit is equal to closing capital minus opening capital minus additional capital plus drawing. So here closing capital is equal to 37,000 minus 26,000 minus additional capital is 9,500 plus what is the drawing? 6,500 should be added. Correct answer is 8,000. Option A is the correct answer. 30. A business provided the following information: opening inventory, closing inventory, rate of inventory turnover. What is the question? What were the purchase for the year? To calculate the purchase for the year, first we have to know what is the cost of sales. Cost of sales we can calculate from the equation rate of inventory turnover. Rate of inventory turnover. Rate of inventory turnover is equal to cost of sales divided by average inventory. So here rate of inventory is given 5 times. 5 is equal to cost of sales divided by average inventory. Average inventory is 6,800 plus 6,000 divided by 2. So 5 is equal to cost of sales divided by 6,400. So cost of sales is equal to 6,400 multiply 5, that is 32,000. If cost of sales is 32,000, cost of sales is 32,000, so what will be the purchase? Cost of sales is equal to opening stock plus purchase minus closing inventory. Cost of sales is equal to opening inventory plus purchase minus closing inventory. So closing inventory, here we have to calculate the purchase. Purchase is equal to cost of sales minus opening inventory plus closing inventory. So purchase is equal to, what is the cost of sales? Cost of sales is equal to 32,000 minus opening inventory 6,800 plus 6,000 is equal to 31,200. So the correct answer is option B. Next, question number 31. Jerry started his business on 1st January 2022 with no opening inventory. On 19th April 2022, a fire destroyed all his inventory. Jerry provided the following information: January to April, revenue, purchase, gross margin. What is the question? What was the value of inventory destroyed or closing inventory? So first we have to calculate the gross margin or gross profit, then to calculate cost of sales. So gross margin is equal to gross margin or gross profit is equal to 30,200 multiply 25 divided by 100. So the profit is equal to 7,550. Next, cost of sales. Cost of sales is equal to revenue minus gross profit. Cost of sales is equal to revenue minus gross profit. Revenue is 30,200 minus 7,550. So the cost of sales is equal to 22,650 is the cost of sales. Here we have to calculate the closing inventory or inventory destroyed. So there is no opening inventory. So purchase minus closing inventory is equal to cost of sales. So closing inventory is equal to, we have to calculate closing inventory. Closing inventory is equal to cost of sales, purchase minus cost of sales. Purchase minus cost of sales. What is the amount of purchase? Purchase is given in the question, 25,600. Minus, what is the cost of sales? We already calculated the cost of sales, 22,650. 25,600 minus 22,650 is equal to 2,950. So the correct answer is option B. Question number 32. A trader provided the following information: profit, working capital, non-current liability. What was the return on capital employed or return on investment? ROI. Return on investment or return on capital employed is equal to profit divided by capital employed. Then capital employed is equal to, what is capital employed? Capital employed is equal to capital plus non-current liabilities. So here profit is given. Profit is 24,000. 24,000 divided by capital employed means capital plus non-current liability, 120,000 plus 30,000 into 100 is equal to 24,000 divided by 150,000 into 100 is equal to 16%. So the correct answer is option B. Next, question number 33. Which action could clothing retailer take to improve his rate of inventory turnover? Increase the selling price. It will not help to improve the rate of inventory turnover. Offer discount on last year's design. Pay clothing suppliers as quickly as possible. No. So only 2 is the correct answer. So A is wrong, B wrong, C is the correct answer. Next question number 34. A trader is considering selling goods on credit to a new customer. What could be calculated from the customer's financial statements to indicate the time normally taken to pay for goods purchased to their suppliers? Suppliers payment is trade payable turnover. So the correct answer is option C. Next, the last question of this paper, question number 35. Which accounting policy require that the information in financial statement is free from significant errors and bias as per the reliability concept? So option C is the perfect answer. Now we are done the complete paper of May-June 2022, paper 11. Hope you all are clear with question number 1 to 35 solution. If you have any doubt in the solution, please put your doubts in the comment box. I'll be clearing you. If you are not subscribed my channel yet, please subscribe my channel. Thanks for watching.